Okay, good afternoon, everyone. I'm Mark Ferguson, and on behalf of my colleagues at the McMaster Institute for Transportation and Logistics, I'd like to welcome you to another edition of the MITL In Conversation Luncheon Series. Today, our guest presenters are Lindsay Kislock and Lisa Baratta from WESTAC. The title of the presentation is WESTAC 2026 Compass Report, Sector Perspectives in a Time of Uncertainty. Just to start with the land acknowledgement, McMaster University recognizes and acknowledges that it is located on the traditional territories of the Mississauga and Haudenosaunee nations and within the lands protected by the Dish with One Spoon Wampum Agreement. So as far as how we run the session today, we'll have a presentation, probably approximately about half an hour or so. We will administer the session through the chat function. So as you think up questions, feel free to type them into the chat box after the presentation is over with. I will administer the question and answer session and move on to hopefully an interesting discussion from the presentation. The presentation will be recorded and can be accessed at a later date on our website, mitl@mcmaster.ca. So just to move on to the introductions, Lindsay Kislock. Lindsay was appointed president and CEO of WESTAC in January 2021, bringing to the position extensive public policy and government relations experience. Before joining WESTAC, Lindsay served as the Vice President Corporate Affairs for the Mining Association of BC. Lindsay has a master's degree from the University of Washington in Public Administration and a Bachelor of Business Administration from Lakehead University. I'm also going to introduce Lisa Baratta now. Lisa was appointed Vice President of WESTAC in January of 2018. She has been with WESTAC for 25 years in increasingly senior roles, most recently as Director, Administration and Program Delivery. Lisa provides operational and strategic advice and is responsible for the member forums and financial administration of the Council. She also serves as Corporate Secretary and Treasurer. Lisa holds degrees in Commerce and Law from the University of British Columbia. So with that, I believe we're starting with Lindsay as the first speaker, so I shall pass it off to Lindsay.
Thank you, Mark, and good morning and welcome to the Western Transportation Advisory Council's 2026 Compass Report webinar. As Mark said, I'm Lindsay Kislock, President and CEO of WESTAC. I'm joined by Lisa, my co-presenter and colleague, Vice President of WESTAC, and I also believe Sarah Myers, our Manager of Communication, has joined us. I think if we get into any serious difficulties, Sarah can help us out. For those of you unfamiliar with WESTAC, it is a nonpartisan organization founded in 1973 by the Western provinces, along with industry and labor, to improve coordination and address transportation challenges. WESTAC members span all aspects of freight transportation in Canada and are represented by senior decision makers. They include carriers, logistics providers, ports, terminals, shippers, labor unions, and the three levels of government. The members represent a significant share of the Western Canadian economy. A defining feature of WESTAC is our tripartite model, which brings key perspectives together as equal participants, supporting system-level thinking rather than advocacy. Over time, WESTAC has evolved into a trusted convener focused on long-term transportation issues, providing a space for evidence-based dialogue without lobbying. Today, it brings together senior leaders from across the transportation system to support informed, forward-looking collaboration. To give you a sense of who is a member of WESTAC, let's go to the next slide. You can see this is a representation of our business membership. It spans the full supply chain with the exception of air cargo. These are the organizations that are directly responsible for how the system functions day to day. Next slide, please. As I mentioned earlier, labor has been an important part of WESTAC since the beginning, and their perspective is critical because labor is deeply embedded in how the system actually operates, and these are our current labor members. And finally, moving to the next slide, our government members. We have participation from 3 levels of government, and government plays, as you know, a key policy role, regulation, and long-term infrastructure planning, not possible without governments. And at its foundation, WESTAC remains an advisory council to governments. So next slide, and we'll talk about Compass, why we're here today. The annual Compass report is a unique WESTAC product that highlights the critical insights, expectations, and plans articulated by executives in business, labor, and government from across Canada's transportation industry. The survey is revised annually to reflect the changing trends and events that impact the industry, which are showcased as spotlights. The data in this report are identified in the year that it was gathered, and the data reported was collected from an online survey from November 5th to December 1st, 2025. The figures are rounded to the nearest digit, and the 2026 Compass report is our 9th annual report. We are looking forward to our 10th next year. Executives from across the transportation sector were invited to complete the Compass survey, reaching well beyond the WESTAC membership. To give you a sense of who responded to the WESTAC survey, we'll look at the next slide. So this is who we've heard from. I think interesting to note that 36% of the respondents were C-suite executives. And this is fairly representative of who responds to the Compass survey annually. Providing some context, we'll move to the next slide. So the 26th edition reflects a period shaped by ongoing trade volatility, geopolitical uncertainty, economic pressures, and changing policy conditions, as opposed to the previous couple of years that were shaped by acute disruptions. This year's findings indicate a system that's operating more steadily than in recent years, but continues to face long-term challenges around competitiveness, reliability, and resilience. You know, as surveyors, we're always interested in comparing our results and what we were hearing from survey respondents with what other surveys are hearing. And so if we go to the next slide, we just included the Canadian News-Based Policy Uncertainty Index, which shows, kind of confirms the changing conditions. And this is, you know, when you they look at an index based on newspaper articles regarding policy uncertainty. And you can see that the number of articles talking about uncertainty is continuing to peak. And so in 25, when we were surveying, it was almost at the all-time peak with 413 articles about uncertainty each year, or each month, sorry. So that just confirms our key findings, which are on the next slide. The report highlights how transportation leaders are responding to uncertainty, managing risk, adjusting expectations, and focusing on system performance. The operating environment in Western Canada's transportation and supply chain sector continued to evolve throughout 25, following several years marked by acute disruptions. The year was defined less by crisis response and more by sustained uncertainty, driven primarily by external trade dynamics, shifting policy signals, and uneven global economic conditions. The insights provide valuable context for policymakers, industry stakeholders, and researchers seeking to understand the current conditions and the factors that will influence the system's trajectory in the coming year. Now I'm going to turn it over to my colleague, Lisa, who's going to tell you about the top challenges that emerged from the survey.
Thank you, Lindsay. So as Lindsay said, I'm going to shift into some of the quantitative findings from the survey, starting with what respondents see as the biggest challenges ahead, first from a business perspective, and then from a transportation perspective. So let's begin with the top 5 business challenges over the next year. The number one challenge by a wide margin is U.S. trade tariffs and protectionism. Nearly two-thirds of respondents identified this as the top 5 challenge. To put that in context, the only issue that has scored higher in recent years was labor challenges back in 2022 when it reached 72%. So this is a very strong result, and it speaks to how much uncertainty around U.S. trade policy is weighing on business decision making. The number 2 challenge is geopolitical risks and uncertainty, concerns over the world trade order, disputed trade routes, at the time Suez Canal, tariffs from China on Canadian agricultural products. And then after these top 2 issues, we see a cluster of challenges ranked 3rd through 5th. Economic slowdown was identified by 36%, cost competitiveness by 35%, and obtaining approvals for projects by 33%. What's interesting here is that while these issues differ, they all point to the same underlying concern: uncertainty and friction that make it harder to plan, invest, and execute projects. Now, just as important is what didn't quite make the top 5 this year. Supply chain resiliency and sustainability came in at 32%, just 1 point shy of making the list. This was actually the number 4 challenge last year and now ranks 6th. Disruptions, which were the number 1 challenge last year, dropped to 31%, putting it at 7th. And domestic political risks and uncertainty, which ranked 3rd last year, fell to 9th this year. So overall, what we're seeing is a shift away from acute crisis-driven issues and towards structural and policy-related concerns, particularly around trade and competitiveness. Next slide. Let's turn now to the transportation challenges, looking ahead over the next 2 years. If you downloaded the report back in January when it first came out, there was an error in this list, which is now being corrected. So the link to the report is in the chat. This is really a top 6 list because there was a tie for the 5th spot. And once again, the results are very tight. The top 3 challenges are separated by just a few percentage points. Number 1, uncertain trade environment with the US. 2, lack of a coordinated infrastructure plan, and 3, disruptions. Disruptions were 64% last year, making them the number 1 concern. So this is a good decline, suggesting that while disruptions haven't gone away, they're no longer dominating the conversation the way they were. If you think back to last year, that's when we had the railway strikes, and then there was also some longshore strikes and lockouts. And the next 3 challenges are also closely grouped. We've got lack of reliability at 33%. This issue has been remarkably consistent over the years. Number 4 this year, down from number 2 in 2022 and number 3 in 2023. Declining cost competitiveness at 30%, which has ranked 4th for the last 2 years. And again, the tie for an uncertain trade environment with other countries, excluding the US, also at 30%. Just as before, what's fallen off the list is telling. Reputation, which was number 3 last year, would have ranked about 7th this year. Government inability to make timely decisions, which was the number 1 challenge in the 2023 survey, is no longer top of mind. But based on some of the open-ended responses to other questions, I believe people's patience will run out this year without meaningful progress on projects being handled by the Major Projects Office. Labor shortages, which ranked 1st in 2022 and 2nd in 2023, have dropped all the way to number 17 this year. And insufficient capacity, which was a top 5 issue for the first 6 years of the survey, is now ranked 16th, with just 13% identifying it as a concern. This shows that recent improvements by railways, ports, and terminals have paid off. 2025 was a record year or near record year for many commodities. So overall, the transportation side tells a story of pressure easing in some operational areas, but policy, planning, and competitiveness issues remaining persistent. Next, I want to shift gears a bit and talk about some of the measures that suggest things may be getting better, but slowly. It's not a dramatic turnaround story, but there are clear signals of stabilization and modest improvement across several indicators. First, if we look at the overall business outlook for Western Canada, 29% of respondents now report a positive outlook. That's still not a great number, but it's an improvement from the low of 20% in 2023. And while it's well below the 56% positive outlook in 2021, that was coming out of COVID and reflected a very different moment. When we asked why perceptions are improving, respondents pointed to a renewed focus on major projects from both provincial and federal governments, and the fact that some long anticipated projects are now online, notably the TMX expansion and LNG Canada. For those that may not be familiar, LNG Canada is Canada's largest liquefied natural gas export terminal and represents one of the largest private investments in Canada's history. An estimated $40 billion was spent on constructing the terminal and the pipeline. Next, the business investment climate in Canada. Here we also see movement in the right direction, though from a low base. The percentage rating the investment climate is poor has dropped from 47% in 24 to 36% this year. That's progress, but it's important to note that there's still a 25 percentage point gap between those who view the climate as poor versus good. On the change over time, the percentage who believe the investment climate is better has doubled, reaching 26%. At the same time, 44% still believe it has become worse over the past year. So the sentiment is improving, but it remains fragile. Next, looking at the regulatory environment, the share of respondents rating the regulatory environment as poor has declined from 63% in 24 to 56% this year. And when asked whether the regulatory environment is better or worse, 27% now say it's better. The percentage saying it is worse has dropped from over 50% in 2023 to only 11% this year. That's a notable change, especially considering that in prior years, only 1 to 6% said things were improving. This suggests that changes in policies and processes, such as the Building Canada Act and the Major Projects Office, are being noticed. Next, the reputation of Western Canada's supply chains. The percentage rating the reputation as poor has declined slightly from 50% last year to 43%. This brings us more in line with pre-2024 levels. However, there's still a large gap of 31 percentage points between those who rate the reputation as good versus poor. For comparison, that gap was only 16 points in 2022. What's encouraging is that reputation appears to be stabilizing, even if at relatively low levels. Only 13% say the reputation has worsened, down sharply from 61% last year. 18% say it's improved, up from just 4%, and 69% say it stayed the same, very much a wait-and-see posture. If we, as a country, are not seen as reliable, exporters will have difficulty securing contracts and maintaining global market share. Canada will fail to meet Prime Minister Carney's goal of doubling non-US exports. And if international buyers turn away from their Canadian suppliers, these shifts are very hard to reverse. Next, we'll look at competitiveness. It's showing some of the clearest improvement. The percentage rating competitiveness as poor dropped 15 points from 42 to 27%. 23% now rate competitiveness as good, up from 15% last year, and more in line with 2023 and 2024 levels. Similarly, the share saying competitiveness has worsened dropped dramatically from 59% to just 16%. Most respondents have shifted into the same category, suggesting that while things may not be getting dramatically better yet, the sense of decline has eased. Next. Finally, a quick look at labor in terms of labor shortages and hiring intentions shown on these two charts. The percentage of organizations facing labor shortages has dropped to 60%. This is a total of those facing some, significant, and chronic shortages. That's still high, but it's down from 70% in recent years and down from nearly 80% in 2022. At the same time, hiring intentions have declined this year. Only 22% expect to increase their workforce in 2026, down from 45% in 2022. Ports and terminals are the most likely to increase their workforce than the other sectors. Meanwhile, 21% of organizations overall expect to decrease their workforce size in 2026. This is driven primarily by governments, which isn't surprising, but also by shippers, which is a bit concerning. So taken together, the data tells a story of a system that is no longer in crisis mode, but also not yet back to strong confidence. Many of the most acute pressures have eased, but trade uncertainty, competitiveness, and long-term planning challenges remain front and center, and they will shape decisions over the next several years. Back to you, Lindsay.
So speaking of trade uncertainty, as I mentioned earlier, each year in the Compass survey, we focus on a specific issue. This year, the focus was on trade uncertainty and tariffs and Canada's vision to double non-US exports. We go to the next slide. You can see the uncertainty is driving strategic caution. The survey results confirm that trade uncertainty is a defining feature of the operating environment for Canada's transportation sector, while also revealing limits to adaptation and resiliency. Rather than reflecting a single shock, uncertainty has become a structural condition, shaping behavior, constraining investment, and limiting confidence. It's interesting to note that almost 29% of respondents have indicated that their approach to dealing with uncertainty is inaction. There is a reluctance to commit in an unpredictable policy environment. If you wait 5 minutes, the situation is bound to change. So it's inadvisable to respond if you don't know what you're responding to. The recent breakthrough deal with China on canola and India on uranium are examples of the rapidly changing environment. We go to the next slide, please. We asked how confident people were in the ability of Canada to meet the vision of doubling non-US exports by 2035. And you can see it's mixed. 40% are confident, 33% are not confident. Ports and terminals were the most confident in achieving that goal. And the figures are similar on whether people are confident that Western Canada's trade corridors have the capacity for such diversification. Also mixed. We go to the next slide. While international trade barriers have dominated the news, respondents indicated that domestic barriers continue to limit efficiency and competitiveness within Canada. Despite announcements aimed at reducing interprovincial trade frictions, many respondents report little practical improvement. We would be interested in what webinar participants today think about specific issues, what specific issues remain as barriers, and their ideas for big or small that could be pursued to improve domestic coordination. If you wanted to put those in the chat, or if you want to talk about them when Lisa and I are done presenting, that would be great. WESTAC is always looking for solutions. Moving to the next slide. Across both international and domestic dimensions of trade uncertainty, when asked what governments could do to offset trade-related risks, trade-enabling infrastructure topped the list, followed by supporting expansion into new markets, negotiating new trade agreements, and improving consultation with industry. WESTAC always is engaging with our members, and in a recent conversation with Canada's largest export out of the Vancouver Fraser Port Authority, these actions hold. The member advised that even as a sophisticated exporter, they lean on the federal government's assistance in moving into new markets. So the efforts that the Prime Minister is making to expand trade and improve trade internationally are well received by WESTAC members. Moving to the next slide. Finally, we asked respondents to identify specific projects or types of projects that could be funded through the new Trade Diversification Corridors Fund. The types of projects are identified on this slide. It's also interesting to note that there was a great convergence between the Corridor Fund priorities and the priorities identified for the Building Canada Act. Examples of projects most frequently cited included the replacement and upgrading of key rail bridges in Vancouver, whether that's the New West Rail Bridge or the Second Narrows Rail Bridge. Port capacity and inland connectivity were also emerged as core priorities, particularly within the Vancouver Gateway. Respondents highlighted Roberts Bank Terminal 2 project, Delta Port Berth 4, and dredging of the Burrard Inlet as important projects to pursue. Moving to the next slide. We know that the Trade Diversification Corridors Fund isn't sufficient to substantially reduce the infrastructure gap. This is a quote from one of our respondents. And I think when you reflect on the federally appointed National Supply Chain Task Force of a few years ago, they commissioned Deloitte, who identified $1 trillion in deficit gap. So infrastructure is important and it's expensive. Finally, moving to the next slide, looking ahead for the year, we'll be watching to see if the recent stability in the Western Canada's transportation system can be translated into stronger performance. While acute disruptions have eased and confidence has steadied, the operating environment remains defined by persistent trade uncertainty, geopolitical risks, and cost pressures that are unlikely to change and resolve in the near term. The challenge for the sector is the ability to operate with prolonged volatility and uncertainty. For many organizations, the next phase will be shaped by restraint rather than expansion. Investment decisions are expected to remain selective, focused on reliability, efficiency, and risk management rather than new capacity alone. Improving revenue conditions and more constructive regulatory tone offer a limited but significant window to advance priorities that strengthen the long-term competitiveness before uncertainty narrows the flexibility. Progress is going to depend on delivery. The extent to which trade-enabling infrastructure can be advanced, coordination across jurisdictions improved, and predictability strengthened will shape the confidence, whether confidence can be rebuilt or whether it remains constrained. I think the overall message from the Compass survey is it's time to walk the talk. And that concludes the Compass survey for this year, or our report on the survey. And so we have some time for questions. You can use, I believe, the Q&A function at the bottom of the screen, or I think we're going to have maybe moderated questions. I'll turn it over to Mark.
Yeah. If people can add their questions in the chat box or points that you want to discuss, we can see if we can work our way through them. I guess I'm not seeing any so far, but I guess one thing that's worth asking is there seems to be more stability evident than in past years, and I'm guessing the new federal government, new prime minister may have something to do with that. I'm wondering what some of the impressions on that are.
Yeah, I think that ties with what my single biggest surprise was coming out of the Compass survey is that, executives remain optimistic. They've heard what the new federal government has to say and what the prime minister is doing, and they are open to a government that does things differently. So they're watching and waiting. I think the window for the government to produce results is open, but it won't stay open forever. So, like I said, the government needs to start making those project approvals. We need to see a decline in interprovincial trade barriers. It's great that they announced the new federal funding for infrastructure. That money needs to roll out and projects need to begin.
Yeah, I'm not seeing any questions in the chat box, so
well,
hopefully we've got one now, but I'm just encouraging people to, yeah, they're starting to appear now.
Good. Well, it's interesting. So Lisa and I are based in the West, in British Columbia. And certainly the sentiment in the West seems different. Lisa did a bit of mining of the data for, responses coming from the East versus the West. And there is more optimism and I think less concern about the current economic conditions in the West than there is in the East. There certainly appear to be more acute when we looked at U.S. tariffs. In the West, only 61% of our respondents were concerned with U.S. tariffs, where 83% in the East were concerned with tariffs. The economic slowdown was mentioned by 31% of respondents in the West, but 54% in the East. So there's certainly differences.
So Ken says that $1 trillion sounds like a lot. Is there a sense of what we need to do now that's something less than that?
Well, I think one of the final slides covered it. There are a couple of pinch points in the West that need to be dealt with, and they're not short-term fixes. So if you're going to build a bridge or replace those, in that case, 2 bridges, you need to start the process with consultation and approach decision who are using the bridge. And $1 trillion sounds like a lot of money, but when you look at the infrastructure investments we've made over time, they've been limited, and there's a lot of refurbishment that we need to ensure resilience.
One thing that I didn't see much mention of was maybe I missed it, but if we were talking about Ontario and central Canada, there would probably be a fair amount of mention of highways and congestion and those types of challenges. I'm just wondering if that seems to be less of a factor in the West.
Well, I don't know that highway investment came out as much as investment in terminals and in rail. But if I was talking on behalf of my government members, they certainly would be talking about highway investments. The national transportation system, or what people think as Canada's national highway, isn't in fact a Canadian national highway system. It's funded by provinces, and they need some support from the federal government. And the investment of the federal government into the highway system has been quite limited. So I know all of my provincial members would be advocating for new corridor funding to be invested into the highway system. And they would also point out the percentage of goods that do move by truck is very high.
Yeah, with regard to the Trans-Canada Highway in Ontario, we certainly see that there's opportunities for more investment, to put it mildly. We've got a few questions that have accumulated from Charles. How should businesses partner with the government on the infrastructure investments needed for greater trade? Do they prefer to invest, or would they prefer higher taxes?
So Lisa, you can feel free to chime in. I would say the partnership needs to start with an infrastructure plan. I think what industry wants is to understand what the governments are going to invest in and what their long-term plans are. And then we know from the past, under the Asia Pacific Initiative, the New West Partnership, that the private sector will come to the table with their own money and invest in it. We're not suggesting for a moment that it just be government investments.
And if you look at what some other jurisdictions do, like in the UK and Australia, they have 20-year infrastructure plans. And so when companies are looking at opening new mines, or they want to develop different, expand railways and ports, they know exactly where the government will be investing. Or, they might not know where you can invest every year, but you have a sense of where the government's going, and that is a tremendous help and gives that certainty that businesses like. And in terms of the taxes, I would say they're not looking for higher taxes, they're looking for higher depreciation to match what you can do in the States, where if you invest, you buy a locomotive, you can write it off 100% in 1 year. And so they would just help balance the competitive position of Canadian transportation assets.
Okay, a question from Jackie. In one of the slides, Lindsay mentioned one of the strategies is to increase system efficiency. What are the specific areas the system efficiency should be focused? Any examples?
Well, Jackie, I think you'd know that I would answer with pursuing paperless trade. There is ways to, I think, maximize and the system, the infrastructure that we have. If we're sharing information digitally, we can identify pinch points. So we have been pursuing a survey at WESTAC around paperless trade and industry's interest in kind of keeping pace with our international partners on the ability to share information related to trade digitally with government agencies and with each other. So I think that's an example of system efficiency. Partnership and collaboration always demonstrates and yields greater efficiency. If you look at the Gemini partnership between DP World, CN, and Hapag-Lloyd, they were able to deliver huge predictability and reliability for their customers, and therefore increased efficiency.
Another example might be railways increasing co-production arrangements, where the each railway can operate on the other's tracks. And that's a way to expand capacity without laying additional tracks.
From Barry, I did not hear much about macro variables, in particular interest rates and exchange rate value of the Canadian dollar, or is this captured under the comments on competitiveness?
Lisa, what do you think about that? Because it didn't, Barry's right, it didn't really come up in the survey.
No, it didn't. I guess at the time, I can't remember definitely oil was at a much lower level than it is today, so it wasn't as big a concern. Um, but yeah, Barry, I'm sorry we don't have an answer to that question. It just wasn't raised.
I
There's
know
a lot of bigger
yeah.
issues that they're facing.
And interest rates, when I've talked to our members, seem to be less of a concern. So, there's that move to, instead of grant money through National Corridor Fund, perhaps offer loans through the Canada Infrastructure Bank. And though that is less of an interest, because many of the respondents to the survey can borrow money at very competitive rates. So the lowest interest rates available are usually available to the biggest transportation companies.
There was a difference between the East and West when it came to capital availability. So that's the firm's ability to access to borrow money. It ranked number 15 overall in the top business challenges, but it was ranked, or 38% of respondents in the East identified it as a challenge, whereas only 10% in the West.
Okay, a question from Richard. What are the main holdups in reducing interprovincial trade barriers and what can be done about it?
I think the main interprovincial trade barriers come down to trucking, kind of road capacity, and it comes down to provinces making a commitment that goods can move across the country is one load and not having to be reorganized or repackaged. Same with wine. I mean, you look at, I think provinces are going to have to give up on policies that they have held close for revenue, for economic reasons. So I'd say that would be my answer. Lisa, what do you think about interprovincial trade?
I would agree with that. Trucking is the biggest one that our respondents would have mentioned. Um, it's just hard to reconcile with the different geography, the Rocky Mountains versus the prairies and the soil conditions. And
Next question from Barry. Is the Churchill Trade Corridor part of the West, or is the focus the Pacific markets?
So Manitoba, founding member of WESTAC, has been a big supporter of the Churchill Trade Corridor. So certainly it's on the minds of Manitoba, and I would say all of WESTAC members are watching what's happening in Churchill and the Arctic Gateway Group for an opportunity. But primarily the focus is on the West and on ports in British Columbia. However, I think it's important to note that while most of our goods move out through the Pacific ports, WESTAC members, the St. Lawrence Seaway, the Port of Thunder Bay, when things go badly in the West, and they sometimes do, we've seen a couple of instances over the last 5 years where goods can't move, whether it's because of disruptions caused by fire, labor, or climate, then the East and the Port of Thunder Bay and the St. Lawrence Seaway become very important, as well as moving goods south.
people are considering Churchill as an option, but right now, as you know, Barry, the rail system just can't do the weights that the mainline system can in the south. So perhaps if the rail can be upgraded to the same weight capacity, then that would be a tremendous help.
From Maria, given the strong support for federal Arctic investment and infrastructure, do you see Western Canada viewing Arctic corridors as a strategic supply chain opportunity?
So WESTAC holds 2 member meetings a year. Usually our fall meeting is either in Vancouver or Calgary. Last year, we were up in Yellowknife in the Northwest Territories because certainly WESTAC members view the Arctic investment and Arctic infrastructure as important. It's, I think, most important at this point around optionality and whether it's from a sovereignty point of view or having options should things go badly. They're interested and supportive. Is it the answer to improving supply chain goods movement at this point? Realistically, it won't be over the short term.
But it's important to develop so that we can expand the mine opportunities in the territories.
And I'd be remiss, we need to actually, the overall message from Compass, I think, is equally important in the Arctic. The time for talking is done, that we actually need to deliver on many of the commitments and promises that have been made in the Arctic.
I guess a couple of hot topics nowadays. One is critical minerals, and the other is AI. And I'm just wondering if there's any highlights that might have emerged from the survey that address that. And if not, I guess we can expect seeing more next year, perhaps.
Well, I mean, talking about AI, investing in AI is on everybody's minds. And it was interesting when we looked at the AI, the interest in AI and investing in AI in the East versus the West. It's certainly not, it came up 5%, I think, Lisa, in the West, where 29% of the respondents raised it as an opportunity in the East. So, it's on people's mind. The sustainable energy transition, also fueled by critical minerals. Important in the West at 6%, but viewed as even more important in the East at 29%. So critical minerals are key for Canada. It's something that Canada has, that the world wants. So getting mines online sooner rather than later. Historically, at a minimum, it's been a 7-year process to get a mine approved. And I think realistically, it's been a lot longer than 7 years. So we need to shrink that timeline if Canada's going to compete.
I understand
Yeah.
that another topic of potential interest, I guess, an organization that might complement WESTAC in central Canada or eastern Canada. Did you have any thoughts about that?
Well, we have many members, WESTAC members, that also have operations in the East and are interested in having a similar organization. And Lisa and I often have conversations about, WESTAC's been around for almost 55 years now. Why isn't there an EastTac? And in many ways, the West is simpler. We have fewer large bulk shippers, and 2 major ports where goods are moving out of. So you have a smaller group that you need to bring together. That's not to say I think the importance of the collaboration and working together has been proven. So the need to develop an EastTac has grown in importance, and WESTAC has always indicated a willingness to support the development of that organization. In fact, I'm going to Montreal to talk about WESTAC later this week, and with the view of selling the importance of a similar organization in the East.
We have another question from Barry. Do we finally have peace in the grain handling transportation supply chain? Shippers and carriers are content with the current regulations and performance?
I would say it's not necessarily peace, but they are content. 2025 was a great year for the grain handling system, apart from the Chinese tariffs on canola products. I've met with some grain companies recently, and they had no complaints about the railway service, which for my time at WESTAC was a first, Barry.
And then another question from Charles. And then should Canada try to upgrade its raw materials instead of simply exporting them? And what about an oil refinery in BC or Alberta? And that question also seems topical to critical minerals processing.
Absolutely. I mean, I think any time Canada can get into the value added production and getting Canadians involved in processing their own critical minerals or products, it's a good thing. And I think there are a number of examples of people who are trying to make that happen, certainly around rare earth. Isn't Lisa in Saskatchewan? There's talk about a development of a facility.
Yeah, so Saskatchewan has, I can't remember the name of the facility off the top of my head. It was with, I think, the Saskatchewan Research Council or some organization with a similar name. They're looking at doing the first processing facility in Canada, and that's needed as well when you're looking at developing the mines in the north. It would be a tremendous help if we could have that recycling or the processing done in Canada, whether it be in the Alberta Industrial Heartland or in somewhere in Saskatchewan. An oil refinery, given the current regulatory approval system, I can't imagine how long getting approval for an oil refinery would take. If it's taking, you know, upwards of 7 years for a pipeline. Yes, with like Lindsay said, the more we can do in Canada, the better.
Is there a sense out west that to some extent we've gone a bit too far in the last 30, 40 years or so in terms of uh, you know, pretty intense supply chain development interacting with the US? Or uh, is there a sense that the US is really going to be very central to our future in Canada, or sort of regardless of the current circumstances?
We have talked about diversifying from US markets for years. And in fact, have we diversified? No, I think we actually have been trading more with the United States than ever. I think there's a recognition now and understanding that being beholden to one market is dangerous, and to be have a better risk strategy, mitigation strategy would be to diversify. So I think diversifying and doubling our non-US exports, not to say it's not to say we're not going to trade with the United States. Of course, we always are. But what else and how can we diversify the markets that we trade to reduce the risk to the Canadian economy and to Canadian companies? So that's the goal. It's not to completely get out of US markets. They will remain our key and most important trading partner, but we need to diversify our exports.
Another question from Charles. Since fertilizer has become an international problem, could Saskatchewan add value by developing more of a full fertilizer industry, including nitrogen and phosphorus as well as potash?
I don't know the answer to that, Charles, but I bet you do. And I'm thinking that it probably is an opportunity. And I don't know where Charles is based, but certainly Saskatchewan has a fairly progressive government and interested in making things better for Saskatchewan residents and some of the kind of their economic vision that they set. I think it was called Saskatchewan 2030. They've been able to achieve great things, whether it's helium and lithium. And I think the understanding of investing at home and creating more jobs is certainly understood in Saskatchewan.
I've been pretty interested. Sorry,
Sorry, we're
I,
headed to Regina for our spring meeting, and we'll pursue that question and discussion with our colleagues in Saskatchewan for you.
I was just going to say I've been pretty interested in some of the statistics on unemployment recently, and I think Saskatchewan has one of the lowest in the country right now, whereas Ontario is pretty close to the highest. So it's pretty interesting what's going on. I'm guessing the U.S. aspect is having a big impact on Ontario. It's interesting to hear about Saskatchewan. Just wondering if you have any other thoughts about that.
Yeah, one of the great things with WESTAC is that we move to the province where the minister is the incoming chair. So every year we're going to a different province, and you get a sense for the strategies of different governments. And whenever we're in Saskatchewan, I have the impression of a government with a long-term vision for economic resiliency of the province, and how it's shocking. I was shocked the first time in this role that I went to Saskatchewan, how diversified that province is. You do think, I always thought of grain and agriculture in Saskatchewan, but it's way more than that. One of the major project offices identified projects is in Saskatchewan, and it's a copper mine. In the south of the province, they have helium, and with the goal of, I can't remember, Lisa, but it was a shocking percentage of helium that they have the aspiration of providing world markets. I think it was 20% or something like that. So lithium in the south, the oil and gas is important to Saskatchewan. Uranium, only province in Canada producing uranium.
Oil and gas is actually Saskatchewan's largest industry, which I think would be a shock for many people.
Are there any thoughts about how the situation in the Middle East may be impacting some of your members, or impressions that you think they might have?
Certainly, oil and gas costs are going up rapidly. At the same time, we have many oil and gas members, so I think that their revenues are also increasing. But I think it just confirms what we heard in the Compass survey, right? Like, geopolitical issues are the only constant, the only thing that can be counted on. And today it's the Strait of Hormuz. What will it be tomorrow? And so how do you run a business and reduce your risk in an unpredictable environment? And so that, I think, just it's oil and gas today, but what is it going to be tomorrow?
And as much as firms would like to take advantage of the situation and supply additional product to new customers, they can't jeopardize their existing relationships. They've got long-term contracts with many customers, and they can't just, double their production because there's something happening in one part of the world, whether that be Ukraine or in the Middle East. They need to fulfill their existing contracts.
But I think about naysayers in the oil and gas, and think about LNG, that Canada's missed the LNG boat. Well, you never know when that boat's going to come around again. So if you have companies that are interested in investing in your country, you should take a concierge approach and support those companies investigating the opportunities that they're interested in pursuing, because
Sure.
I don't think government is a good predictor of market opportunities.
This next question from Felix probably fits in pretty well. Is it within your focus to electrify transportation also?
Certainly, members everybody has experienced the impacts of climate change, right? It's a real thing. It's caused horrendous upheaval in transportation. So my members would acknowledge that, as much as they can electrify and reduce their carbon footprint, the better it is for them and for everyone. We have many members that are investing who have electrical or have resources to create clean energy and are looking at ways to share that. So when I think about in British Columbia, the Northwest Transmission Line, and with the possibility of moving clean energy up to the Yukon, I believe BC signed an MOU with the Yukon. It's on everybody's mind. Electricity, while prevalent in the West, isn't like there isn't kind of infinite sources of clean energy, and I think it's a real concern for WESTAC members that will run out of electricity and have to start buying it on international markets, because as we've moved to electrify plants and transportation, we will reach a point when there is limited electricity available.
I think like the Port of Vancouver and YVR, the airport, they said that if they were both to electrify their entire operations, it would exceed the capacity that's going to come online later this year with the new Site C dam. So, Canada as a country, we're going to need to look at different energy sources if we are going to electrify the country, whether that be small nuclear reactors, solar, wind, we need everything.
Okay. I'm not seeing any further questions. Any closing comments from Lindsay or Lisa before we end the session?
No, I would just like to take the opportunity to thank everybody for joining us today and for your interest in WESTAC in the Compass survey. We will be doing it again next year. Plan to be probably in survey in the field in October. So ask you to look out for the survey, respond to the survey. It's not just for WESTAC members, it goes beyond. And thank you for joining us and thank you for hosting us today, Mark.
Yeah, thank you very much to both of you, Lindsay and Lisa. Very interesting survey results. It's nice to have this be able to follow these trends over time through your reporting and survey efforts. And very much enjoyed the discussion that came afterwards. So thank you both for supporting the MITL Zoom Conversation series. Thank you.
Awesome. Well, we hope to be back next year with our 10th annual survey.
We look forward to it.
Thanks, everybody.
Bye-bye.
Bye.
Bye-bye.